Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of 11 penny stocks. So I got a request to do 10 penny stocks, added one to the list. These have all run over the past week. As far as I understand, I have not looked at most of these. Some of them I have. But yeah, I just wanted to give my perspective on maybe levels that might be good to add at if they do pull back. As you can see here, this one has. But yeah, before I get into the video, this one is going to be unedited. Would just take me too long to go through all 11 and cut out the ums and ahs and whatnot. So I apologize about that. But I will include timestamps so you can check out down below to find the tickers that you're looking for. And yeah, I guess I'm just going to start. And yeah, I think that's pretty much it. So, looking at the first one here, Akanda. Oh, yes, one thing I was going to say. I don't hold any of these. I do not plan on establishing a position in any of these. I assume market caps are pretty small. This one, 5.5 million. I am not touching any of them, so just wanted to throw that out there. But anyways, Akanda Corporation, ticker symbol AKAN, closed on Friday, May 17th at a price of 17.26 cents. Being up about 30% on the day, even though it was massively red. And so, for most of these tickers, what I am going to do is just do a Fibonacci retracement going from the approximate bottom here at about 8.5 cents. It's going to be off just a little bit and then going up to the high here right around 59.4 cents. And so, from that retracement, excuse me, we can see that price has pulled back approximately to the 786, which is right around 19.3 cents. Current price is below that, and so what I could see is a pullback to fill this gap here. So the high on Thursday, the 16th, was 17.2 cents. And actually, it's really just like a fraction of a penny away from that, but there still is a gap there. So I could see price pulling back to that level if there were to be another rally up, but it is quite possible that it does pull back down to 8 cents, and that is the bottom. So be careful about that, but yeah, maybe this retracement will provide some insight into this level right around at 19 cents that AKAN needs to reclaim before moving higher. But anyways, hopefully that was helpful. And so on to the next one. This is Barnes & Noble Education, ticker symbol BNED. I have gone over this previously during live streams, and I did just today add this downtrend as somebody had commented about it. And so my thoughts on this, the comment was really that this chart was looking pretty similar to the GameStop chart. However, I view the GameStop chart as a breakout from a pretty massive multi-year falling wedge. Whereas this for BNED, I see that this is a downtrending channel. Price has resided in more or less going back to June of 2022. And so what seems to me like what would be a really good move is to get a break above right around $1. And so currently price, as it did close on Friday, May 17th at 45 cents, being up over 150% on the day with this pretty massive candle. It does strike me as pretty interesting that it did stop right around the midpoint of that channel, and so I could see there being a lot of resistance there, but I could also see there being some more upside if it were to get up to $1. That's more than double what the current price is. But with that being said, it did pull back from the high on Friday, which was 60 cents. So do consider that as this could be coming back down to the lows here around 15 cents. And it does also look like there might be some support here with the consolidation right around here at about 33, 34 cents, also corresponding with the top over here from April 16th at a price of 33.9 cents. So do look for that as a level that we might be seeing a pullback to. And just like AKAN, I am going to be doing another Fibonacci retracement here, going from the low, try to line it up just right, take it up to the high of 60 cents. And let's see, there we go, perfect. And so it does look like the 382 corresponds with approximately the middle of that channel, as well as this downtrending line that I've drawn, and just a little bit below the closing price of 45 cents. And so what I could see is it actually pulling back to the 618 corresponding with these tops over here. And so that would be at a price of 32.28 cents. So don't be surprised if price does get down to that level. And, considering that there was a gap here and it's only really covered by this candle, it is quite possible price could be coming down to the 786, just like with AKAN. And that would be at a price of 24.75 cents. So do look for that, and also just thinking about how we think in quarters, we think in dollars. So I do think that price could be coming down to 25 cents if it is to break below the 618. So do keep that in mind, but bigger picture, I do think that this could be making some big moves to the upside. If I do look over at the weekly chart, there's a lot of room to the upside, but it doesn't mean price has to get up there. But one thing that I guess is somewhat encouraging, taking a step back, looking at it on the weekly time frame and a week having just closed, we have been forming lower lows in the stock price with this downtrending channel, but the RSI has actually been forming higher lows. And so that is actually bullish divergence. Maybe we saw that bullishness be carried out on Friday. Maybe it doesn't continue, or maybe it pulls back a little bit before continuing. So I would look for that. And if I were to partake, I would be waiting for a retrace to the 618 at 32 or 33 cents in case it doesn't get exactly to that level. But like I said, not participating in any of these, just having some fun looking at the charts. And so the next one is a pretty popular one. I've seen this a lot on Twitter. And everybody talking about Crown Electric, ticker symbol CRKN, the Kraken. And so as we can see, we've had a pretty big green candle here on Thursday, going up over 400%, almost 420%, being about 0.52% away from 420. But pretty massive there, but also a big wick to the upside. And then on Friday, while we did see it come down, even though it's a pretty big candle. It is red relative to the previous day's close, coming down about almost 30%, coming down 28.75%, closing on Friday at a price of 17.10 cents. And continuing down in the after hours to about 15% more. And so the big thing that stands out to me is the wick high on Thursday was to a price of 53 cents. And so that seems like it's the real level we need to be getting above, closing above, in order for it to continue higher. And as we can see on Friday, we did get a wick higher than that, but could not close above it. So, excuse me. And so that does suggest a fair amount of weakness, but there could always be another rally in the coming week or weeks ahead. And so again, just like how I do with all of these, I'm going to do another Fibonacci retracement coming from the approximate low around 4 cents, going up to the high of 60 cents or right around there. We can see that price has retraced pretty nicely to the 786. So maybe there is a dip buying opportunity right around the corner. It did close just above the 786, which is at a price of 16.18 cents. And maybe that's it. Maybe that's the bottom. Maybe we see a rally and a reclaim of the 618. Getting up to 25.55 cents. So do keep an eye out for a step up to that level. But, of course, this could be rallying much, much higher, as I do have this kind of random line here. I'm not really sure what that is, but that could be suggesting that price will be going up, as there is a lot of upside for the stock. But there's also a lot of risk, as from current price returning to the lows. We could see here, if I get my measurement tool, I can take a measurement from the base of the candle, the close on Friday, coming back down to around 4 cents. That represents a 76% drop. So a lot of risk here, even though there might be a lot of upside, still a lot of risk. could lose everything. So do be careful. And then the next one on the list, I've covered this a lot on the channel, and actually this line here at 15.91 cents, I did have some shares at that price, but I had bought them over here. I'm not exactly sure where. And, price went down. I lost conviction and I got rid of them. I only had 100 shares, so nothing too crazy. But I could have made money if I had held, even closed my position at the closing price after this massive pullback that we saw on Friday. Looking like it came down about almost 38% on Friday closing at a price of $1.03. Did not put in a bearish engulfing candle, but nearly did after we've seen these pretty big moves up over the course of the last week, not just on Friday, but over the course of the week. So this one does seem a little bit more sustainable, but still probably a little bit precarious, as they all are for the most part. And so the high on Thursday, the 16th, was 2.35 cents. Couldn't get a close above that level on Friday. Did open above, did go up to a high of $3.90, but then did pull back quite a bit. Actually, let's take a measurement from the top there. And so coming down to the bottom, that represents about a 70% drop. So if anybody was buying the top there, could be feeling a lot of pain right now. But, are there some levels that price might be settling at before the next leg up? If there is to be one, there may very well not be one. So if I take a measurement from the bottom here, let's see, right around 3.81 cents. I think I got that exactly. Coming up to the top here at $3.90. Let's see if I can get that just right. Okay, it does look like this one as well has pulled back to just above the 786 at 86.45 cents. So do keep that in mind, that it may have found a bottom here, but it could also break lower. Like if we take a measurement from here to the floor, that represents, a 90 or more than 70% move to the downside. So always be cautious with this. There is also this gap here, and just, returning to that gap from current price, that looks like it would be a drop of 70%. So it could still be coming down. Good to be careful with it. But if it is to be respecting this Fibonacci retracement, maybe it is at that 786. And if I do adjust this, let's see, and move it to really like Tuesday, I guess, the lows on Tuesday, still, right around the 786. So maybe there is something there. Maybe it does consolidate over the course of the next week, and maybe that is a bottom before the next move up. Or, maybe that's a bear flag and it breaks lower. So good to be cautious with it. But anyways, on to the next ticker here, looking at FLJ Group, ticker symbol FLJ, closing on Friday, May 17th at a price of $1.55, being up on the day more than 200%, about 222.95%. So pretty remarkable there. Does have a pretty big gap to the upside though, and filling that gap would be coming down to about 48 cents. Let's see, the high was 48 cents on Thursday, so that is exactly the gap that would be filled to close, also at 48 cents. A move down to that level would represent a loss, a drop of, actually from current price, this is a green candle, so from current price coming down to there, that would be about a 70% drop from current price. So a lot to risk there, also with this big wick to the upside going up to $2.75. It's quite possible that is, a topping signal with this big wick. So it's going to need to take a lot to get above that, but a close above 275 would suggest a lot of strength. Coming back down to fill that gap from the high represents an 82% drop, so pretty massive there. But, this is just one candle. There might be more, and so let's take a measurement from this to see. Let's see. Going from the low, this is right around 37.3 cents exactly. That is the low. Up to the high here, 275. We could see that price did dip, or at least started, opened down here right around the 786. So it has not yet retraced to the 786 because it opened down here. It didn't close down there. So we could be seeing a pullback getting to 87.8 cents. But, since it did open green, I think it would be key to be seeing what's going on in the after hours or pre-market trading. Right now, it looks like the after hours trading on Friday, price, I thought I just checked to see if I was recording. I almost had a heart attack because I've been talking a lot. Anyways, price did come down about 27% in the after hours. So that could be suggesting that pre-market will be coming down, and maybe we see a bottom hit around 87.8 cents. It does look like it closed right around the 50% level at $1.55.9, just being, a fraction of a penny below that. And so maybe if it does retrace, maybe it doesn't pull back to the 786, maybe it just comes to the 618. That would be at $1.27.8. So, good to keep all of these levels in mind, and also do keep in mind that there is this gap to the downside. So, that may be filled. I suspect it will be at some point, but it might be a couple weeks from now, and there might be a lot more upside between now and then. So do keep that in mind. The next one, I believe this one was requested. I was told GVAV, but this one here is GWAV, ticker symbol GWAV, which is Greenwave Technology, which closed on Friday at a price of 15.41 cents, being up a little over 4% on the day, but then coming back in the after hours, down 13.69%. So, not looking so great there. There might be, a pullback. Again, there are gaps pretty much in all of these stocks to the downside. So good to keep that in mind and trade these cautiously. Did hit a high on Friday of, 29.65 cents. So, that may be, like with all of these, we're seeing these big wicks to the upside, and a lot of them red candles on the Friday. So that could be suggesting that we are going to see a pullback before a next attempt to get higher highs. And so, I could definitely see that happening, but I could also see it coming down to fill these gaps. So good to brace for that if it does happen. And if we just take a retracement from the low here at 4 cents, going up to the high at 29.65 cents, we can see here that price is really just in between the 618 and the 50% level. So it's a range between 13.8 cents up to 16.82 cents. But we did get a wick lower on Friday, and I could see price coming down to the 786 since we did see that wick come down. Let's see. I need to get my cursor back. I don't know why. There we go. It went away for a second. The cross. Let's see, the low on Friday was 11 cents, and so it could be pulling down to the 786, which would be like 9.49 cents. So do keep that in mind. But of course, these gaps to the downside, it could also be going much higher. So do keep that in mind. But the best way to take advantage of a big run is to get it at a good price, and that could be 9.495 cents, something like that, as I suspect we will continue to see the red in the pre-market, and so that might be a good time to dip buy. But, it also might be a good time to catch a falling knife, so be careful about that. Anyways, the next one on the list is Jeff's Brands, ticker symbol JFBR. This one did close on Friday, being green with a green candle, closing at a price of 64.8 cents, being up just over 100% at 109.03%. So looking pretty good there, but again, coming down about 27% in the after hour. So we might be seeing a continuation of that into the pre-market, maybe trading on Monday. So maybe there's a dip buying opportunity if one wants to see if there's another rally up. And I should note, from the top here, 73 cents coming down to these lows. Doesn't look like there's any huge gaps. There's one here that's like a 60% drop. So good to keep that in mind. There is a lot of risk. But if we do take a measurement from the low here at 17.01 cents, I can get it just right there. I got it a little bit low, but oh well. I'm not going to adjust it. Up to the exact high at 73 cents, though, we can see that price. Let's see. It's at the top here, so we've got a lot of levels to the downside that it might be hitting if we are to see a pullback. So the after hours price is 47 cents. That actually corresponds with being right in between the 50% and 382. So that is a range from about 45 cents to 52 cents. So keep that in mind. This is about where price is right now, following the after hours trading session. But since price hasn't really pulled back too much during market hours, I could see it coming down to, let's say, the at least the 50%. It's approximately there right now. I could see it coming down to at least the 618 at 38.33 cents. Does seem to correspond nicely with the high hit on Thursday, which was 38 cents. Maybe there's some support there. Maybe this wick over here does represent some support between the 50% and 618 level. So keep that in mind. But there is also this consolidation down here just below the 786. There might be a lot of support there, and that is coming down to a price of 28.9 cents. So keep that in mind, as that might be a good dip buy before the next rally up. And, I haven't really taken measurements from the bottom to the top, really only done them from the top to the bottom, but going from that 786 just to the high that was recently hit, that represents a 150% swing. So, pretty nice there. Good to wait for those dips and then, trim or sell on the rips. But, you do you. And then so the next ticker on the list here is Pineapple Holdings, ticker symbol PEGY. I did get a request to cover this during a live stream, but it does look like we did put in a pretty big bearish engulfing candle here on Friday, coming down over the course of the day about 28.78 or, right around 29% over the course of the day, closing at 10.54%. So not looking so great there. Did put in a high on Friday as well at 21.49 cents. And there is this gap then here to the downside, which would be getting to a price of right around 8.69 cents. So keep that in mind. There's also this other gap to the downside here. Actually, no, that was filled, with that wick to the downside. So never mind about that. But there is still this gap here. So be cautious of that. And let's see, it did continue down about 10% in the after hours trading, just below 10 cents, really about, is that 1 cent below the closing price on Friday. And so here, if we do take a Fibonacci retracement from the low here, hit on the 13th, which is about 5.04 cents, going up to the high of 21.49 cents, we can see all of these levels. And that gap fill does seem to correspond pretty nicely. My cross has gone away, so 1 second, just gonna try to get that back. There we go. That does correspond, the gap does correspond with the 786, right around 8.56 cents. So keep an eye on that. Price did close on Friday, below the 618, so I think that a lot of that pullback might be there. And I do think that filling that gap, coming down to really, the tops here, that's going to be support. That's right around 7 or 8 cents. Maybe there's some wicks down to that level. Maybe we get some support before the next rally up, whether that goes higher than this high or, if there is just a nice rally. A good way to kind of swing trade is, if you get 100% up. So let's see, that would be, if it does dip to that level, get 100% up, take half your position off the table, and then, there's no risk in losing money, just playing with house money. Maybe it goes up to 40 cents, maybe it goes up to 30, or maybe it gets up to 20 and doesn't quite get up to 21.49 cents. That's still a lot of upside, and it's a nice swing, unless you want to love the company and hold it forever. I think that 100% swing is a pretty good one. But anyways, moving on to the next ticker here with Sintx Technologies Incorporated, ticker symbol SINT. I don't believe I've covered this one yet. We do have a pretty big red candle on Friday, coming down almost 40% on the day, closing the day at a price of 8.5 cents. And not moving in the after hours, or at least being flat over the course of the after hours, closing that session at the same price. And so with this big red candle, we don't have a bearish engulfing candle relative to Thursday's candle. At least I don't think so. So we got an open on Friday at a price of 14.02 cents with the close. Actually, yeah, that is a bearish engulfing candle by 0.02 cents because the close on Thursday was 14 cents. The open was 0.02 cents higher than that. So a pretty massive bearish engulfing candle engulfing the prior 2 days candles, even though not the wicks. And with that big wick up on Wednesday, That high was 22.8 cents. That's really kind of like the level that's needed to get a close above in order for this to continue higher. And right now, I think it's kind of in its pullback phase. But let's see where it might be pulling back to. And so if I just take a measurement from the low that was hit, I believe that was Tuesday, the 14th, that is around 3.3 cents. Going to try and get this lined up just right, but it's probably going to be off. There we go, just right. And then up to the high there of 22.8 cents. Let's see if I can get it right there. Does look like we got a wick below the 786 on Friday. And so that 786 is at 7.47 cents. And yeah, flat in the after hours. The low was 7.26 cents, so just below that 7.86 level. So yeah, I just hate it when that cross thing goes away, my crosshairs. But anyways, I could see that the bottom is in with this one, but I do suspect since it is red and, price closed right around here, I could see it coming down and, maybe flattening out before making the next rally up. And with that, you want to see volume coming down as price comes down. We do see that here. So that could be suggesting, if it does flatten out and volume's flat, could be suggesting there is to be another rally, but there's always a risk to that it could be a bear flag and it breaks lower. I have a tough time identifying those, being able to distinguish whether it's a bearish or bullish consolidation. But if volume is low, if price is low, that does suggest that there could be seeing a reversal. So yeah, look for that. If volume is picking up as price goes down, that suggests it will continue down. So be careful about that. And I should note, I don't think I mentioned it, this gap fill here will be coming down to the high, or actually the close, on the 14th was 5.5 cents. So that's about 3 cents lower than current price. Might be nice to actually fill that gap, maybe with just a wick down, and then, start to move higher after that. So, who knows? Kind of tough to say. But anyways, moving on to the next ticker here. This one's pretty similar. This one is ticker symbol SNTX, which is Suntex Enterprises Incorporated. And yes, ticker symbol SNTX here. This one actually, is flat on the day. I think this one might actually be a mistake for it to have been requested because it doesn't look like it was too exciting. Let's see what happened on, I don't know if the ticker changed or something, but sorry about that. I'm just going to skip this one. I must have had a typo in the ticker there. But the final one, this is Tupperware brand, ticker symbol TUP. Reminds me of 7-Up a little bit. Excuse me, which closed on Friday, the 17th, at a price of $2.20, being up a little over 30%, about 32.5% on Friday, and continuing up almost 6% in the after hours. So this one's actually looking pretty good, closing the week green and with a green candle and being green in the after hours. So it's the trifecta, that's what you want. And so I suspect that this will probably be opening green in the pre-market. But if it does open green in the pre-market, when price opens, when the market opens, there might be a pull-off, a sell-off, and to fill whatever gap is formed. So do be cautious of that. That could actually be the dip buying opportunity, maybe getting in at the high, not the high, the close, $2.20. That'd be better than $2.33, which is the after hours pricing. Maybe at pre-market it's at $3 a share. So good to not FOMO, good to not chase. But yeah, you do you. Whatever makes you happy, as long as you're happy. But then doing a retracement here from the low, which was 92.6 cents. Got that lined up just right. And then the high of $2.55. We can see that price, is above the 236, and this one did retrace to approximately the 618. So out of all of these that I've talked about, I feel like T-Up is the most mature as having had a pretty massive rally up. Let's actually see what the percentage changes from the bottom here. That is a percentage change of 174%. So pretty massive rally. And then following that, it seems like it's had a pretty healthy pullback. maybe we see some consolidation around the 236, which is at a price of $2.16.7. That could be a bull flag if it is to consolidate around that level, and then maybe it is going to, rip past $2.55, maybe get to $2 and, like I said, $3 a share. So keep that in mind. But, maybe it doesn't hold and maybe it does pull back. If it is to have respected the 618, and that is the bottom here, I would look for it to hold the 50% kind of as worst case scenario for a bull case for it to continue higher. And that would be at a price of $1.73.8. So keep that in mind. But a better worst case scenario, if there is to be a pullback, could be the 382 holding. That would be at a price of $1.93.0. So that's a nice number. Not so many decimals of the dollar. But that might be a good dip buying opportunity if it does pull back, but it does look strong. This one actually looks the strongest out of all of them, in my opinion. But, I'm not chasing, I'm not participating. I am just happy to share. And on that note, thanks for the requests. And, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. I hope you guys enjoyed. Take care and trade safe.